Man, inflation is running red hot. Hey everyone, it's John Chapman with a short video looking at the recent consumer price index chart showing an 8.6% year over year inflation. We haven't had inflation like this in decades, especially a staggering 100% increase year over year in fuel and energy costs. Now, you can see we've been in a period in the early 2000s of low, moderate inflation. So, this recent inflation of 8.5% has coming to a shock. And so, I'm wondering what the stock market looked like during this period of the mid 70s when there was high inflation. Dimensional Funds Advisors publishes a great chart called the Matrix chart, which shows the various stock market returns over years, and it allows you to see what the cumulative return has been over various different times. And so specifically, I want to look at the early 70s, and from what we can see from this chart, 1973 had a negative 14% return. 1974 had a negative 26% rate of return. This is almost a 40% drop in the stock market in 2 years. Now, the reasons impacting their market back then are certainly different from what the market looks like today, but this was not a fun period to be. You had high inflation, a falling stock market. It took almost 2 years for the market to then subsequently recover. So whether or not we're in this for a short recovery or a long recovery, that's yet to be seen. But something I'm curious about as somebody that's a long-term investor, how long did it take for the market to return its momentum and offer investors compound growth? And what we can see down here from 1973 to 1983, what the average compound return had been over that 10-year period. And what you can see is if somebody had held in the game, yes, they went through a period of bad markets. They went through a period of high inflation, but they stuck with it. Maybe they even added to their portfolio. They would have received an average 8% rate of return just in the S&P 500 at this alone. So it's important to stay diversified. It's important to know we don't know exactly what the market's going to do. But it's also just reassuring to know that the longer you have as an investor, the higher likelihood you have of the market recovering and offering you positive compound growth over time. Looking at the S&P 500, companies like Apple and Microsoft, Google, Amazon, Berkshire Hathaway, these are the companies that make up and dominate our stock market, what most of us are invested in. These companies likely aren't going away. They have a strong customer base, and they're likely to be able to persist in the future. Even if these companies don't dominate the stock market over the next 20 years, there's a potential for a new company to come in and offer disruption and innovation, offering the potential for new investment returns. And the last chart here is just a reminder that markets reward discipline. Again, looking at 1970, the oil embargo, the S&P 500 dropping, high inflation, and yet when you take a step back, even amongst the negative headlines, in this 50-year period shows an average 9.5% return on the stock market. It's a reminder that investors can look beyond this current moment in time, which can feel like a kick in the gut, and be excited about continuing to save and invest for their future.